Starbucks posting a disappointing first quarter earnings report, but investors, they don't seem too phased. Shares of the coffee chain actually moving higher ahead of the open despite missing estimates on both the top and bottom line, also cutting full year guidance. For more on that, we want to bring in Rachel Ruggeri, Starbucks' Chief Financial Officer, also with us, Yahoo Finance senior reporter Brooke DiPalma. Great to have both of you here. Rachel, let's talk about the quarter and some of the trends that you are seeing, because yes, investors seem to be brushing some of the weakness aside, but I'm curious how you're navigating this clear slowdown that maybe we are starting to see in the consumer and how that is now factoring into maybe your pricing strategy going forward.
Sure. Well, thank you for having me. Let me just start by saying, we had a strong quarter in Q1, and it was really driven by our most loyal customers remaining engaged across the globe. And so as we think about going forward, as we look to some maybe more near-term and transitory headwinds, what we're really focused on is continuing to drive customers into our rewards program. And we're using targeted and efficient ways to be able to do that, encourage frequency of visits, maybe encourage another attach, driving afternoon day part. So we have a lot of power in our very proprietary personalized engine that goes with our digital capabilities. So that's one way. Another thing we're doing is we're really amping up our voice on social media as it relates to awareness of our products and our innovation as well as our brand. I think we have incredible products, and that was demonstrated in Q1. We saw a record ticket in our U.S. business, highest that we've seen in over 50 years, and that was really driven by the innovation we drove, specifically in cold around coffee, around tea, as well as the attach we had in our food offering. So we have an ability to continue to drive that through our innovation, but it's important that our customers broadly, particularly our more occasional customers or customers that aren't in our rewards program, need to know about that. So we're leveraging social media to amplify that. And in addition to that, that helps drive our revenue, but we've been able to unlock pretty significant efficiencies in our business through our triple shot strategy, which gives us a lot of opportunity to drive the 15 to 20% earnings growth that we affirmed on a full year basis. We had great success in Q1 with that, and we'll continue on that journey. And that's what's giving us the confidence to be able to meet our full year expectations.
Rachel, I do want to quickly dive into those personalized promotions that you're doing. Do you think AI technology alone can help boost foot traffic back to previous levels here in the U.S. and abroad?
Well, we've always used a form of AI. We have a deep brew technology that we've used that backs our personalization. And so, yes, I would say the ability to leverage data analytics to go into specific cohorts within our Starbucks Rewards member base helps us to understand how do you target occasions, how do you target attach, things of that nature. We're being more targeted in terms of favorites, in terms of options for customers based on their preferences. So there's a lot of opportunity. The goal is to bring more customers into that program. We had an increase in the U.S. business of 13% in the quarter, and we had a record 59% of tender, so very engaged customer base. But as you continue to bring more customers in and you personalize the offerings, there's a lot of opportunity there, both in terms of traffic, but as well as in terms of ticket.
When you think about that ticket, the change in ticket declined internationally 3% when you compare the quarters, and then you saw deceleration here in the U.S. What type of pricing maneuvering do you believe you're going to have to implement in order to make sure that you still have demand generation that's successfully going forward to have that foot traffic, as Brooke was mentioning, coming in the door, but also spending at a level that is consistent with previous quarters?
Yeah. Let me address the ticket in international first, which is largely driven by our business in China, where we had a negative ticket of about 9%. That's largely driven by, because we have a more cautious consumer environment, we saw lower spending. And so that impacted our merch sales, which tend to be higher ticket. And in addition to that, we saw a greater promotional environment. We also promoted, but we believe, that what we want to go after is being in the premium market. So we want to be more targeted with our promotions going forward. So we don't see a continuation of our ticket in that way. We expect to be very targeted in how we bring our customers into the program. As it relates more broadly, and we look at our U.S. business and how we think about that ticket, the opportunity continues to create value. Our customers, if we continue to innovate and provide that value, then they will come in for that experience. And that's what we see in terms of how we drive that ticket and how we drive that opportunity. It's intended to be very targeted, but it's also intended to be driven through innovation. When we can connect with our customers in ways that resonate, that gives them optionality, which can drive both traffic, but as well as ticket.
Rachel, to be clear, do you plan to pull back on any of those price hikes you've taken?
We do. We learned a lot in Q1, largely in our U.S. business, and we were able to successfully drive afternoon with those offers, as well as increase the membership in our rewards program. But we learned a lot through that, and we're going to be going forward much more targeted and surgical about those promotional offerings because there's a greater efficiency. So you will see a shift in terms of how we promote.
And going off of that, more specifically, what you're seeing in China, because largely the criticism, or at least what analysts have been pointing out, is the fact that you're up against competitors who are offering products that are much cheaper. So how do you then bridge that gap? Because it's a very different pricing strategy than what is playing out right here in the U.S.
Yeah, we look at that. That strategy is really around, creating consumption. So getting trial and consumption. And we do believe that over time we will benefit from that. We continue to focus on being premium, and that means a premium experience. And we have distinct and competitive advantages to drive that, including a very locally relevant coffee-forward innovation strategy with our beverages and our food. We saw some good success with that in this quarter, and we'll continue that. But we expect that over time, you're going to start to see the per capita coffee consumption increase, which is a good thing, and we'll benefit from that. But the market will start to mature, and we believe there will be a tiering, and we're going to continue to strengthen our position in the premium market because we believe we're well-positioned to lead. So that's how we're going to continue in the environment that we're in today.
Rachel, Lakshman made it very clear on the call yesterday afternoon that there has been no union-busting playbook at Starbucks. Stores that voted to unionize now make about 4% up of the U.S. portfolio. Should investors think of unionized stores as just part of Starbucks moving forward?
What I would say is we still believe a direct relationship with our partners is best because it allows us to deliver the brand experience. But we recognize there are partners, choose to have representation from a union, and we're committed to be able to have a constructive dialogue and a path forward to work with the unions and with all partners. But where we continue to be focused is really through our triple shot strategy. It's all around continuing to elevate the experience for our partners. We've listened to our partners. We've made pretty significant investments over the past couple of years, and we'll continue to do so. And that's driven lower turnover and more stability in our stores. We were very successful this quarter as it relates to the investments. The investments are driving tangible financial benefits, but also they're a differentiator for us because we know that our partners are and always will be a differentiator. And so it's important for us to continue to invest over the long term.
Rachel Ruggeri, who is the Starbucks CFO, and our very own Brooke DiPalma joining us this morning to help break down the earnings. Rachel, thanks so much for the time. Appreciate it.
Thank you. I appreciate it.